Hello and welcome. It's David and Brent again this week joining you. Today is March the 13th, Friday the 13th, talking about what's the latest that we have on our minds. Another week, another big week in agriculture, but also in the U.S. economy. The first thing, Brent, that I wanted to mention is that um, we had a question close. The question was about soybean prices, the November contract falling below $9 a bushel. That happened. And one of the things that Ag Forecast Network users who are participating in that question can do is they can go see the score of that question. It's available. And Brent and I were comparing our scores, and we spent quite a bit of time going through the scores. And so it's a lot of fun to look at that. I did pretty well. Brent's calling for a recount over here, so he was a little disappointed in his results. But the important thing to keep in mind, we're going to make a short video here to explain the scores so as you look at that. But keep in mind, it's a rank, and so you might have a really good forecast, but there could be other people out there, a lot of people in Brent's case, that had a slightly better forecast, and his rank was not reflective of a good or poor forecast. It was just a better or not so better result relative to other people.
I think it's really interesting because it gives you some feedback, and that's useful. And like we've all said, we've said all along. I mean, if you want to get better, you have to have feedback, and I think that's useful because it got me to thinking a little bit. It kind of challenges your assumptions a little bit. Say, because honestly, I thought I had a pretty good forecast on that, and I'm like, wow, I'm in the 50th percentile. I thought I did better than that. So, really, really interesting to kind of make you kind of revisit. Well, maybe I wasn't doing quite as good a job as I thought, and so I think I think people are going to find the scoring useful, and it'll challenge you a little bit, I think, to say, well, how good a job did I really do on this? And that's what this is all about. So I think that's really, really useful.
And what we try to do with the scoring is allow you to see what your forecasts were in the past, what the consensus were in the past, and what your notes were when you're sharing that. So when you go check out the scores, you see your score, but then go back and review. Go back and look at your notes. Go back and look what you put in there. I like to say you can't, if we don't measure it, we can't improve it. And so this is a way for you to get some feedback on some things that we've measured. And one thing we'll mention here quickly, there are a million ways that you could score these. And so we have one method here. I'll link to the methodology that we've used. And so it's just one way of getting the feedback. I think it's a lot of fun to look at that as well. So expect Brent to get much more competitive. He's going to be on top of these other questions. Speaking of other questions, we've added several new questions. I think there's 8 new questions. 4 of them are around the macroeconomy, and we'll discuss those later in future episodes. But we also have 4 questions around the March planting intentions report. Questions about I'm trying to pull those up real quick. Will corn acres be above 95 million acres? Will soybean acres be above 84 million? Will wheat acres be above 45 million? And cotton acres, will they exceed 13 million? So Brent and I are really focused on the corn and soybean number. We follow wheat and cotton as well. So take a look at those. It's a good way to build your expectations for that report that's going to come out at the end of the month.
Yeah, I think pretty important. And keep in mind, these are just around prospective plantings. We also have questions on crop production acres, kind of the final or the June 20th acreage report, which is different than the prospective planting. So take a look at those, because they're, with all the uncertainty going on right now, I think sometimes we can forget about the other things. And we have a prospective plans report coming out pretty soon, so it's going to be an important one, and it's going to kind of set the stage. It's coming out March 31st.
So Brent, do you want to share? I'll share my forecast. 95 people get in there to make their forecast. I have a 74% chance of more than 95 million acres of corn being in that planting perspective report. I've probably, now that I said that out loud, I want to back it up a little bit, but I'll throw it out there. I'm at 74%. I reserve the right to change it, but that's where I'm at today.
Yeah, I'm at 65%. I think it's on the. I mean, 95 million is a big hurdle. But we were talking about this earlier. The current price ratio is about 2.32. I mean, just without actually calculating that ratio, before when we talked this morning, I said, soybean prices have completely fallen out of bed. And that's my perception. But when you actually do the calculations, the price ratio is held pretty similar to what it was a week or two ago. So my perception was maybe a little off of what reality is, in that, yeah, they've fallen a lot, but corn has fallen a lot too. So I think, there's just so much uncertainty, David, right now, and everywhere we look.
Yeah, and speaking of uncertainty, we'll shift gears here to the big thing on everyone's mind, coronavirus. For reference, last week at this time we recorded on Friday, there were about 230, 250 cases in the U.S. Now we're at 1,800, getting close to 2,000, probably in that 1,800 to 2,000 window. A lot of things happened in the last 7 days. So we had universities start to call off. We have had the NCAA tournament canceled, the Major League Baseball and National Basketball Association leagues have been suspended. IndyCar has suspended as of today. Brent, what Disney World and Disneyland have closed. Airlines cut back 10% of their domestic flights, 25% of their international flights. This is a week where things move just really fast, a series of cascading events. So Brent, what's on your mind?
Well, the speed with which, all of this stuff has been implemented, I think is, it's easy to get overwhelmed by it, and overwhelmed by the bad news. And, you see the markets are just so volatile, and, it's not surprising. I think last week I said we were at peak uncertainty, and I think maybe we moved off of that a little bit. We're starting to get a little bit better handle of how it's going to be a big issue in the US. So that's starting to resolve itself, but what we don't know is, have we reached peak panic yet on the individual side? And I'm not sure we have. So I just think you have to expect huge amounts of volatility, and we can talk about the economics of this situation. It's very difficult. The Federal Reserve can do some things, but in order to stimulate the economy, it's just very difficult for the Federal Reserve to do anything that's actually going to stimulate. What they can do is try and make sure that markets function, which is what approach they've taken now. They first started by lowering interest rates, which probably isn't going to do much, and but then by injecting some liquidity into some markets, I think could maybe help. But there's just huge amounts of uncertainty what the stimulus package is going to look like. So I would expect that is going to remain. I think it's the market's going to wake up one morning and go, it's really bad and worse than we thought, and then the next morning it's going to be, well, maybe it's not so bad. And you just see these huge moves, and it's really a wild times.
And I think Howard Marks, who wrote a great article we shared last week, we'll share it again this week, but he got quoted in a newspaper article. I'm not sure it made it in. I forget if it also was included in his memo, but he talked about how a month ago the markets were walking around saying nothing can go right, or excuse me, nothing can go wrong. Everything is perfect. And today, as you said, as we're moving towards peak fear, there's this idea that nothing can go right. Everything has gone wrong. And it seems like this has been the week where everything has started to move towards that direction. So I guess as we're looking forward, some things that we have in mind are, what's the length of this fear ramping up phase, and what's the length of this slowdown that we're looking at in the economy, and then what type of pace of recovery do we see? Don't think people are going to automatically jump back on airplanes and cruise ships in a week or two, and so there's going to be some adjusting here as things move forward.
Well, the other thing that I think one thing I think a lot of people haven't really got their heads around are the supply chain disruptions and that are coming and are already here. And it's going to be hard to get parts for things. There's just so much stuff manufactured overseas where they've shut down factories, and it's going to have tons of impacts that are going to be hard to kind of assess and understand. And so far, I haven't seen any kind of discussion in agriculture about, well, are we going to, is this going to slow down planting or cause problems? And, I don't know that it will, but I also don't know that people aren't going to start thinking about it. And, again, it's really hard to know what all these impacts ultimately have on things like grain markets. I think it's just nobody knows, as that memo said. It's really difficult to know.
I think it's difficult to know, and it's almost impossible to predict where the next supply chain hiccup. You shared an article with me, and we'll share the link to it. It's talking about the medical supply chain, and where are the parts, or what's the supply chain associated with what we're dealing with. Last fall we had a propane shortage that we were really thinking about. What happens if there's a part of the workforce involved in trucking or manufacturing in some obscure location in the U.S. or other parts of the world that has, the butterfly effect, and all of a sudden we have implications that move forward. We just have to be. It's a good time to review your plans, think about what your bottlenecks might be moving forward, and how do you start to remove some of that uncertainty for your operation and your businesses.
Yeah, and yeah, just lots and lots of uncertainty, and I think we're just gonna have to deal with that for a while. Hopefully, in the coming weeks, it will start to resolve itself in ways that we can understand and plan for. Right now, it's just really difficult.
Yeah. So to wrap up this week, take a look at your scores on the soybean price. That November contract, had gone close to $9, but this week it fell through $9 and it stayed below $9. So review your score there. Check out the new questions we've uploaded. Start making some forecasts. A lot of content got written alongside those. Some of those macroeconomic questions were a bit tricky to frame up. A couple about interest rates, a couple about GDP. So you might want to read the technical notes on those, and then update your existing forecast questions as well.
Yeah, the one specifically on the 10-year Treasury bond yield. I mean, that's been a lot of news falling below 50 basis points kind of intraday. The question is whether the U.S. Treasury will print something below 0.5 in their based on their daily issuances. So just keep in mind that difference to go to forecast it and take a look at what the question really says. I will say too, I saw a question the other day. I was on Twitter. I haven't been posting much on Twitter lately, but somebody was asking a question about, what's the impact of this severe? What's the economic impact? They used kind of vague words, and they were putting probabilities around it. And I just kind of replied, I think it's great you're putting probabilities out, but we also, in order to answer the questions like that, we got to, what do you mean by severe, and what do you mean by widespread outbreak? So I think, we've learned a lot about that, and our users, I think, are probably ones that would pick up on that pretty quickly. You know, really think about, you know, when people are making statements like that, you've got to really think through what does it really mean. The other thing I would encourage people to do is when you look in the overview page on the deeper dive, click on the view all articles if you haven't been here for a while, because there are a whole bunch of other articles in there that you may have missed that you might find super interesting. So click on that to see all the things that are in there.
All right. Well, I'm going to leave everyone with a quote that we're sharing this week in the weekly email. It's one of my favorites. It's from Richard Feynman, who is a theoretical physicist. He says, "The first principle is that you must not fool yourself, and you are the easiest person to fool." So that rings true for at least for myself, especially when it looks at scoring these forecasts. It can be a very humbling experience to look back and realize I thought I was doing well, or I thought I knew what was going on, but maybe not as much. So thanks for joining us. Send us any questions or ideas or feedback that you have. We'll be happy to answer your questions here when we get back next week. Thanks.
Thank you.